Texit Coin, TXC, presents itself as a bold and revolutionary digital currency aimed at empowering Texans, or anyone disillusioned with centralized finance, by providing an alternative economic system rooted in decentralization and self-sovereignty. The project is heavily branded around Texas independence themes, suggesting a culturally resonant movement rather than just another cryptocurrency. Its creators claim that TXC has no pre-mine, no institutional backers, and was fairly launched through a decentralized mining model designed to avoid the power imbalances seen in most mainstream cryptocurrencies. On paper, this sounds appealing, especially to individuals wary of the traditional banking system, the federal government, or even dominant cryptocurrencies like Bitcoin and Ethereum that are now largely mined by major corporate entities. The narrative is cleverly constructed to attract people who value financial independence, limited government, and local identity. However, upon deeper examination, serious concerns emerge, many of which are consistent with patterns seen in past crypto scams and highly speculative ventures. The project's technical documentation is either missing or extremely thin, with no published white paper, no peer-reviewed audits, and no visible open-source code repositories. There's also a lack of independent verification regarding the infrastructure behind its so-called mining shares, which users are encouraged to purchase. Alarming signs surface when users report receiving coin rewards before any mining has actually taken place, which strongly suggests that payouts may be tied to recruitment or initial investments rather than actual proof of work or network contribution. Classic red flags in Ponzi-style schemes. Further undermining the project's credibility is the complete lack of a professional or verifiable development team. The founder, Bobby Gray, is cited in promotional materials as having testified before Congress and having experience in monetary reform, but no third-party documentation exists to validate these claims. Even if those credentials are accurate, they don't compensate for the absence of technical transparency, public accountability, or external governance. Most reputable cryptocurrency projects go to great lengths to establish trust, through audits, community forums, GitHub activity, or direct communication with developers. TXC does none of this. Instead, it leans heavily on emotional appeals, anti-establishment sentiment, and local pride. Its website and marketing materials are designed more like recruitment pitches than serious technical briefings, and some of the project's milestones, such as Pizza Day or vague references to future forks, resemble marketing gimmicks rather than tangible goals. Equally problematic is the token's presence or lack thereof on legitimate exchanges. TXC is traded only on obscure, low-volume platforms, which not only limits liquidity but also opens the door for price manipulation and exit scams. Trading volumes are suspiciously low, and most buying activity seems to be internal or limited to small investor circles. This lack of market validation further isolates the coin from the broader crypto ecosystem and makes any price action highly questionable. Moreover, the regulatory profile of Texit Coin is virtually non-existent. There is no registration, no legal framework, no contact information for investor disputes, and no protections in place for users who lose funds. Several independent crypto watchdogs, scam tracking forums, and Reddit communities have flagged the coin as highly suspicious, citing everything from fake apps that show inflated profits to misleading reward structures that mimic multi-level marketing systems. Despite this, the coin continues to attract some followers, often through word of mouth and social media referrals, rather than through objective technical merit. This grassroots traction, however, is not evidence of legitimacy. Many scams gain traction in their early stages before collapsing. What makes TXC particularly dangerous is that it walks a fine line between marketing innovation and financial deception. By wrapping itself in the language of decentralization and liberty, it creates a strong emotional hook for potential investors while sidestepping the rigorous demands of transparency, accountability, and proven technology that define real blockchain innovation. In conclusion, while Texit Coin may appeal to those looking for a local, ideological alternative to mainstream financial systems, it fails almost every objective test of legitimacy. There is no open-source development, no transparent team, no regulatory oversight, no reliable exchange support, and no verifiable mining structure. What remains is a project that uses powerful symbolism and community language to mask what many experts and watchdogs believe to be a dangerously high-risk, if not outright fraudulent, scheme. Anyone considering participation should proceed with extreme skepticism, avoid investing more than they can afford to lose, and seek out thoroughly vetted alternatives that adhere to the principles of transparency, decentralization, and long-term utility.